Good evening, ladies and gentlemen. Today is the 31st of March. It is the last trading day of this financial year and also an expiry. I think I spooked myself out a little bit from last year's last expiry of the financial year, which was one of the easily top three worst expiries of my life. The trading video is there in the intraday trading channel. I think that day was 10% damage on the margin that I was using. And well, back then I used to trade a very different risk reward. I used to target 6, 7, 8% and be willing to give up at least 3 to 4%. But still, it was one of the worst, most stressful, most annoying expiries. I think I spooked myself a little bit out because of that. Because last night itself, I decided I'm not going to take much risk today. But then again, that was a different time. My risk reward used to be different. Ironically, the March of previous financial year ending, I made 40 lakhs profit this month. So that is more than what I made this March. But still, overall, I'm just getting into a trail here. Was an excellent, clean expiry today. And I think this financial year has been great for me. I'll make a video tomorrow giving an entire summary of the phases I went through this year, how I performed over the financial year, a summary of everything. So that should be something interesting. Anyway, let's go over today's trade. Today's trade was very clean. There was really not much that would have given too much trouble to people as long as they were not adamant in their positions. From the beginning till end, for me, it was just a smooth one-way mark-to-market curve. And yeah, I mean, if people were super adamant about holding longs above 17,500 and didn't cut them in time, then it would have been painful. But I think there was enough and more opportunity to get out of those positions. So let me go over the trade. The order book, as always, is available in Telegram. My entry position was this. What was my idea? Right at the beginning, I want to be a little close to the market, and then from there move away wherever the market is moving. According to that, take risk off. So my first position that I entered in the morning at this is what time 9:15 only, right? So I shorted the 17,400 put and 17,600 call. Why? Because yesterday also there's a huge buildup of 17,400 put writing, 17,600 call writing. And yesterday towards the end, the maximum OI built up was at 17,500 short straddle. Everyone was writing that for 130, 140 rupees. So it was the first expiry after a long time where on a Wednesday itself, premium was so low relative to what it has been in the past few weeks. We closed at 120 rupees premium at the money short straddle of 17,500. So market was betting big on a 17,500 plus minus expiry. That was very evident. And my strikes are also equidistant from that. And between the two that I sold an average on the put option at about 15.78, average on the call option at 18.77. Now, what is my idea here? My idea is either one of them expanding to 24, right? I will be squaring that option off and moving it away. But what happened? That is provided it happens in time. That didn't happen. My position came into profit. It lost quite a bit. See, this put option has given me 1,04,000 profit. Call option has not given me anything. So the second time when it was breaking a swing, why did I exit it at the same price that I entered? Is because it's breaking that swing. There can be a breakout. I want to exit beforehand. Why did I not hold it till 24? Why is my stop loss moved in? Because I'm in a profit. Now, if this goes to 24, this 10 is not going to help me much. So I'm locking in my profit by squaring off not only the call option, but the put option also, and moving my put to 17,350 and moving my call to 17,650. And my idea from here is I want to do as little management as possible. I've got a quick 5+ points of fall off in premium in the closer strikes. Now I move further away. This is kind of locking in my profit because let us say in the morning, same time, let me show you the chart. See, where did I take off my position? Just as this day's high was being taken out. Now, if we continue to head higher, and at one point that call option did go to about 21, 22, I exited at 18. Then the put option wouldn't have protected me much because there's from that 10 rupees, it went only to 9 rupees, whereas the call option is given by 4 rupees. So I would effectively be giving up some of the initial IV crush that I've captured. So now I've taken risk off, and my idea is, look, I don't want to do much management. I'll put stop loss of 9 and 9, basically 1.5 times whatever is the premium, and from there I will see. So after that, this position also did well. It gave me another 5 points of fall off. The put also lost, the call also lost quite a bit of. So this entire period, nothing happened. And the next thing was once we started to break this swing. So once we started to break the swing, the call option didn't have. So if you see the 17650, it didn't have any premium left, and this put option was now starting to expand. If I continue to be here, the call is going to do nothing for me. So for the sake of managing delta, I once again roll down my call option at the price of 6 rupees, keeping an idea of that, okay, 9 rupees is my stop loss on this. Why? Now, when people say, where do you come up with your stop losses? Look, you have to see there are swings. So these swings will be my stop losses. Basically, if I decide that, okay, I'm going to short this option somewhere around here, then this particular swing is going to be my stop loss. So that's kind of how it's either on the premium value where I won't keep a stop loss which is more than 1.5 times the premium. And secondly, you want to keep your stop loss in a position that, it would be stupid to have a stop loss here. After this is formed, why would you keep a stop loss here? Right? The idea is you want this particular swing to be breached. Only then the real fear of covering will come. So that's how you keep stop losses. It's always around, okay, what is the swing of this option? I want to cover just at that swing or above that swing. And on an expiry, you also use certain biases. Like there's one point where in my position, anyway, I'll get into that. So from here, once again, trailed it, didn't do much. I'm explaining here why my call stop loss is here, this particular level. So until it is taken out, I will not be rolling away on my call. Once again, my position continues to be in a green market. And one point, my put option had only 1 rupee 50 paisa, but my call option had 8 rupees, and I didn't make any adjustment. The reason for that was, if you see the OI that built up, initially there was a lot of this 17,500 put writing in the morning. As we broke 17,500, a lot of that got unwound, and the call side open interest became massive. So you see the 17,500 call, this was about 12:45. Had already reached about 10.4 million, so over 1 crore. 17,600 also over 1 crore. So I'm not too concerned if I'm short the 17,600 if it's expanding, and I don't want to take in additional put side credit after there has been a big IV crash. So continue to hold the position as is, and then just trailed it all the way till the end. And then at one point at around 3 rupees 50 paisa into the second down move, moved down my 17,600 call to 17,550. Once again, stop loss of 5. Just very, very tight. It's like I'm taking a trade. It's got a very tight exit. Either it works or it throws me out very quickly. Once again, trailed this all the way till the end. And that's more or less the end of the day. So this is where we close. And there was one more opportunity, but I don't know, maybe this is a little bit PTSD from last year's financial year, watching that video, because there 1 rupee put option went to, I think, some 60 rupees or something. 1 rupee call option went to, it was all over the place. It was one of the worst expiries. You can find it in the intraday trading playlist, 25th March. So I didn't move in closer. There was an opportunity. I was thinking of, okay, I can move my strikes to 17,400 and 17,500 for about 7.5 rupees, while this was trading only at 2 rupees. So another 5 points would have come there. Decided not worth it. It's just not something I want to do. So that's about it. I hope you had a good expiry. This should have been a relatively all right expiry. Thank you for watching. I hope you had an excellent financial year. I will make a summary video tomorrow about how the year was. Take care. Have a good one.